What's going on, motherfuckers? Throwing together a quick update video. So in this video, I'm gonna just preface this by saying I'm going to be completely transparent in how I view the current situation, specifically with AMC. Um, on a broader market scale, we are about to see some crazy shit to the upside in the market. Um, Albeit this week was very bloody market wide. Um, a lot of tickers are at very crucial resistance points and, you know, rejected, pulled back. I expect to see continuation to the upside, and it's more than likely going to be very, very rapid and very drastic. Um, so with that being said, let's jump into the video, and we're going to kick it off with S&P 500, which had a very bloody week. Like I just mentioned, market wide was very bloody this week. Um, so we'll start with the fact that S&P 500 has been climbing since November of 2022, forming higher highs and higher lows to the upside here. Recently had a local high, a 52-week high of 477.55, I believe was the high, and then all of this week pulling back. Closed the week on a doji candle. This looks amazing. Um, there's really not much to say here. I expect all-time highs and further, and relatively soon. So getting into the micro with this, we have a descending channel here from the highs, from the local highs of 477.55. So a descending channel. I've just been playing ping pong, bouncing off of the support and resistance all the way down to 464 and change. I forget the exact price, but today, so this was the fake out, pulling back in, and then today we broke out of it and tested, pulled back into it a little bit on the retest, but closed above it today. This looks great. Ideally, I would have liked to just having pulled back to 464. It would have been nice to pull back to 460 to retest the macro breakout. This level here, 460, I mentioned multiple times, was a very important level. Rejected it here, pulled back to 409, and then just ripped to the upside for 9 consecutive weeks. 9 consecutive green weeks on S&P 500. Pulling back this week. I mentioned we're going to be retesting this level eventually, 460, whether it's short term, whether it's long term, post macro breaks, post all-time highs. We will eventually test 460 as support. And like I was saying, I would have preferred to have done that now, but it looks like SPY is going to continue upward here. In any case, if we do see more downside, expect a bounce down here at 459, 459.60-ish, this 459 to 460 level. If we do see continued downside next week, expect a bounce there. If the uptrend continues here out of the channel early next week and we continue climbing, all-time highs are on the way. So this looks good. In any case, S&P 500 will be seeing all-time highs very soon. So moving on from that to IWM. So Russell 2000 now. Pulling back with the rest of the market all this week, very bloody. Local highs 205 and change, pulling back all the way to 192 roughly. Closed the week green, on a green candle at least. And really all I wanted to show here was the pattern that we're playing out right now. Breaking the $200 level. So we traded in this parallel channel, 162 to $200 roughly, just bouncing up and down here. Almost 2 years in this parallel channel. Recently broke it to the upside, and for the retest, we pulled back in. I just wanted to mention this before I moved on from this. This is exactly what we saw right before the macro break in 2021, January of 2021, when the bean basket ran, when blue chips ran, pretty much market-wide. Crypto, we saw a macro break market-wide simultaneous in 2021, January of 2021. And from that point until present day, the market has been and is still synced up perfectly. And this next macro break that we're going to be seeing is going to be simultaneous. It's going to be everything running to the upside at the exact same time, the same exact way that we saw back here in January of 2021. But this pattern that played out here, where you break above 200, you pull back down to 191, it's pretty much the exact same thing, exact same levels here, from which you gapped up over this $200 resistance here in red. That's your macro break on IWM in January of 2021, and then all-time highs followed. So this looks ready. SPY looks ready, although I would have liked to pull back to 460. We didn't. IWM small caps should be climbing now. So we're going to be looking for upside here in a pretty big way in the next couple of weeks. So IWM looks great. Again, pulling back with the market. The whole market pulled back this week. NASDAQ as well, pulling back. Same exact pattern as S&P 500, same as IWM. On the pullback here, actually already saw all-time highs on NASDAQ. So again, with NASDAQ, it's the same story. We're going to be looking for a bounce here and continuation further past all-time highs. And Dow Jones, the exact same thing, pulling back this week. Already saw new all-time highs, and it's going to continue upward. So that is pretty much it with the indices. And I've been mentioning this for a very long time now. When SPY sees new all-time highs, that is going to coincide with macro breaks market-wide. So this looks great. Again, all-time highs January of 2022 and lining up for January of 2024. All right, so let's get into AMC. And like I said, I'm going to be completely transparent here. I'm going to say what I think of the current situation. It's not even really what I think. It's more fact than anything else. And that was proven this week as we met our macro resistance. So we'll start with the macro as we always do. Our January and June squeeze equivalents in the green and yellow that we see here. January and June squeeze equivalents in the green and yellow. V-shape, macro breakout down, and then into the downtrend. So here's the macro perspective. Bull cycle, bear cycle, bull cycle, bear cycle. Bear cycle takes you pretty much down to zero. And then from there, you break the macro resistance, reset back into a bull cycle, i.e. a squeeze. Obviously, the last macro break for AMC was January of 2021, and it's lining up again for January of 2024, along with everything else, along with the indices, along with the blue chips, whatever, the entire market. So getting into the downtrend now, with all the noise removed, keeping it consistent with this chart. Here's the macro break of the previous cycle, the previous bear cycle of AMC, the gap down, and the macro break of the current right here. And the sideways consolidation pattern on both sides, and then knifing into the actual downtrend itself. First bottom, first touch point on macro resistance, first bottom, first touch point on macro resistance, crossing the 200 EMA the exact same way. Second bottom, second touch, second bottom, second touch, and then crossing the 200 to the downside on both sides. You don't find it again until the flat portion, the tri-peak. So crossing the 200 to the downside, you don't find it till the flat portion. Tri-peak pokes above it right here, as you see right here, pulls back underneath for this W move, which is the fake out, the third touch on resistance, the fake out, the third touch on the resistance, and then pulling back into it for the remainder of the flat portion. And then the fourth touch being the break, the macro break, the breakout of the descending macro resistance in January of 2021, and then straight line volatility to the upside. And that's what we're looking for again. So again, January always has been, and this is not just AMC, it's the entire meme basket, it's indices, it's everything. The entire market is lining up for macro breaks this month. So that's the downtrend on AMC. Now let's get into the macro whole line itself. And here it is. Now, if you remember me saying in, I think it was the video I made on Friday, that on the 4-hour chart, because the macro resistance line is slightly skewed depending on which time frame you're using, but on the 4-hour chart, we would be meeting it this Tuesday. Our macro resistance, we'd be meeting it this Tuesday. So this Tuesday, we kicked off the week with a doji, pretty much a completely flat day. And I'm going to zoom in, but kicking off the week with pretty much a completely flat day. And then Wednesday, Thursday, and Friday, red. and pretty drastically so, riding our macro resistance line down here. And this is, the most macro resistance on AMC. First touch point here, halted. Second touch point here, halted. Third touch point here, the fake out, halted, and the current flat portion to where we are now. We've met it again, and 3 straight red candles right off of it, rejecting off the macro resistance here. So zooming into that, and here it is. So we met it. This is the 4-hour. I said we'd be meeting it on Tuesday. We did. Sideways day on Tuesday, and then Wednesday, Thursday, and Friday, nothing but red. Pretty much just stair-stepping here. Bear flag reiterating downward right on our macro resistance. So, it's pretty self-explanatory here. We have met our macro resistance line on AMC. I said it's make or break. It's do or die for AMC. We're meeting our macro resistance line. The 2 options are we go to 0 or we break this to the upside and we squeeze. Again, that will be simultaneous with SPY seeing new highs, and that will be simultaneous with the rest of the market seeing macro breaks. So that's that. Now, I talk about macro resistance a lot, as it's very important. It's macro resistance. We're in a downtrending macro. Currently, we were prior to January of 2021, a macro resistance line, lower lows and lower highs all the way down to our all-time low landmark where we reversed. We broke the macro resistance to the upside and squeezed, which again is what we're looking for now. So I talk a lot about the macro resistance. I have briefly touched on macro support, and I'm going to do that again because now this is relevant, and it's kind of scary, but this is now it's relevant now. So this is the macro support on AMC, and this macro support dates back to IPO, and this is the most macro vector, the most macro trend line that you can draw on AMC, and it is AMC's macro support. So starting at IPO, the initial bull cycle of AMC, macro break into the downtrend, first touch point, second touch point, bounce up, find your macro resistance in white here, come down, third touch point here, bounce off, fourth touch point bounces off, fifth touch point bounces off, and then we broke below it and rejected it. So now the macro resistance from IPO is acting as, the macro support from IPO is now acting as resistance in the 2020 flat portion. So we broke below it, we rejected it into the flat portion, rejected here, rejected here, rejected here. I don't know, that's 9 touch points now. I lost count. And then the tri-peak, third bottom all-time low. We broke macro resistance right here, reclaimed macro support, January of 2021, squeezed. The pullback from this squeeze bounced off of macro support into the June squeeze, and then playing out the macro, which is fractally sound the exact same way. V-shape, macro break, downtrend, macro resistance. I don't know why I don't have the touch points marked here, but same story. So macro resistance, our third touch point here, the fake out in July, and then knifing back through the resistance, and guess where we found a bounce? Macro support. So this support line runs all the way back to IPO, and I could really quickly 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 touch points since IPO, the most macro vector on AMC. Now I want to zoom in on this, and this is where shit gets kind of scary. So zooming in on the macro support on AMC, because this trend line, although descending, is still acting as support, and we want it to remain that way. So here is the macro resistance that we're currently fighting. We were fighting all this week, just reiterating a bear flag off of the macro resistance. Here is the macro support running down in green here. And then 0 is the bold red line underneath. So bounced off of it here into the bigger tri-peak move, second bottom, smaller tri-peak move, and now approaching third bottom all-time low, rejecting macro resistance. So, I've been saying for, I don't know, past 3 or 4 months that we would be trading sideways. It was going to be chop city. I said it multiple times. It's going to be slow, choppy, barcoding, sideways price action until we meet our macro resistance. And when we do meet it, there's two ways this plays out. Number one, we reject it and we go to zero. Number two, we break it and we go to the moon. So that's exactly what we did. We came down here. We traded completely flat for 4 months straight here. And this week, we met our macro resistance. Now, we do have this trend here in yellow, which rejected here, wicked over it, rejected again, rejected again, rejected again, breakthrough, retest, bounced off here, and today we bounced off of it again and sitting right up against our macro resistance. If this trend line does not hold, if we do not break our macro resistance, and we would have to break it, I think we can maybe fit a very flat Monday in here. This is a 4 hour, so we could fit a very flat Monday in here, in between the resistance and the support. If we do not break this resistance on Tuesday, we are going to be coming down to macro support in green. And this point where this intersects right here is Thursday. And the price is roughly $3.60, 350 to 370. So if we do not break our macro resistance next week, we're going to see a 40% haircut on AMC next week, and come down to roughly 350 to 370. And really, we really need this trend line to hold. We need our macro support to hold, because if it doesn't, if we come down to this trend line and this trend line fails and we break through it, this macro resistance is pretty much a vertical line that is intersecting zero at the end of this month. So next week, again, if we do not break our macro resistance early on in the week, we are going to be seeing $3 next week, which would take us down to our macro support, which intersects with macro resistance roughly Thursday or Friday. And then from there, if we hold and we break out, great. We're looking for straight line volatility. If we don't, and we break through macro support, we have a very, very steep cliff here. We had room to go sideways for 4 months here. Now that we're sitting on macro resistance, you could see it in the price action this week. Things started to get vertical downward here real fast, as this trend line is pretty much a vertical line. And, this trend line, I keep talking about it, our macro halt line, our macro resistance line. This is the line. This is the resistance that we've been fighting for the past 3 years on AMC. Halted, halted, halted. That was the fake out move. Wicks off here, and then, you could see it. 3 straight candles here descending on the macro resistance. So pretty much the point here is, if we don't break macro resistance early next week and we fail through the yellow trend line here, the micro support, we will be meeting our macro support, which is at roughly 350 to 370, and that will be happening by Friday. So, and then if we break through that, zero is a week or two away. Now, I'm just being transparent here. I'm just mentioning it because that's the current situation for AMC. On the flip side of that coin, if we break the resistance and we if we break through the resistance, we're going to be squeezing. I really do not see a scenario of getting intraday uptrend here. I suppose maybe it's possible. Breaking this resistance line, if we start uptrending out of this, it would probably, we're going to be looking for the channel. We'd be looking for this channel, this uptrend, and then the squeeze eventually whenever we got the macro break. Again, that would be simultaneous with the rest of the market. Breaking this trend line, though, would be breaking the downtrend of AMC. So we would be looking for an uptrend, and that uptrend would take us directly to the peak. I'm leaning that we're just going to be seeing straight line volatility once we break this trend line. I'm just mentioning that because it is potentially a scenario where we break out of this and slowly climb. That uptrend would take 2 weeks, 3 weeks maximum, in my opinion, if we did slightly uptrend before we got the actual squeeze. Like I said, I'm leaning we just straight line to the upside if we break the macro resistance. That's the most likely scenario, is an overnight gap up Ridiculous percentages. So that's the current state of AMC. I mean, we're at the end of the road here. This can has been kicked all the way down to the end of the road. We have met, not meeting, we have met our macro resistance. We are sitting on micro support now in yellow, and we have macro support right below us, intersecting macro resistance roughly Thursday, Friday next week. We're at the end of the road. Like I've been saying, January is do or die for AMC. Still, I do not see a case where AMC goes to zero. I'm not saying it's impossible. I'm saying it's unlikely, in my opinion, and it would have to happen this month. So, the other, the flip side of that coin is we squeeze. Those are the two options here. And like I said, the market's synced up. This is not just an AMC thing. This is market wide. Really quickly, a few examples. BYON, ticker Beyond. Ready for a macro break. So all the landmarks are labeled here, coming off its all-time low landmark, V'ing out of it very nicely, pulled back this week with the rest of the market, and rejected a very important level. $29, roughly $30 is the previous macro break here. That is when things got very, very volatile and parabolic to the upside, was roughly this $30 level, which is where we rejected here, pulled back with the rest of the market this week. Still looks great, looking for more upside here and looking for a squeeze with higher price targets than previous all-time highs at 130. So that is ticker BYON, ticker BKKT, Becky. I'm not getting into the micro with any of these. I'm just showing macro. So here's Becky. Breaking macro resistance here that dates back from IPO, coming off of its all-time low landmark that you see here. Everything's marked here. I'm not really going to bother going through it. So coming off of your all-time low landmark here would be a spring, breaking macro resistance, straight lining to the upside, and then into the downtrend, coming off of the all-time low landmark, the spring, breaking macro resistance, been chopping here, battling for $2. I don't know, a month and a half straight trading over the 200 EMA, and broke out of macro resistance. It looks great, and we're looking for straight line volatility here as well. And lastly, GameStop. Same story, coming off of its all-time low landmark, the spring, macro break, $19 plus here. GameStop looks great, and we're looking for straight line volatility here as well, past all-time highs. So the point that I'm making here with the other examples that I'm showing, along with the indices, which are already pretty much all at all-time highs or very close, we have market-wide tickers left and right that are ready for macro breaks. Now, I want to talk about something else. I want to talk about Bed Bath Beyond really quick, because I saw people talking about Bed Bath Beyond today in comparison to AMC. I just want to talk about Bed Bath Beyond's macro really quick. And I'm not labeling anything. I'm just very simply, previous all-time highs here, downtrending into 2021, macro break 2021, does not form a new higher high. So already this was downtrending. Like the entire meme basket, Bed Bath Beyond squeezed in January of 2021, but failed to make a new all-time high. So then getting back into the bear cycle of itself, obviously it was going to delist because it failed to make a new all-time high. And at the same time, failing to make it to January 2024, where the entire market is set to explode to the upside into another bull cycle. Whereas AMC in January of 2021, downtrending, just like Bed Bath Beyond, into January of 2021, and then macro break, January 2021, new all-time highs. So Bed Bath Beyond never formed new all-time highs in January of 2021. AMC did. And then GameStop is the same story here, downtrending into January 2021, macro break, new highs on GameStop as well. I think Beyond, same thing. Yeah, downtrending into January 2021, macro break, straight line to the upside, new all-time highs here. The difference here with Bed Bath Beyond is when Bed Bath Beyond squeezed in January of 2021, along with everything else, it failed to make new all-time highs, continued the macro in a downtrend, and just eventually led to delist. So it's not the same. Bed Bath Beyond and AMC are most certainly not the same. That's it. We're here. It's January 2024. Like I said, all the indices are ready to explode to the upside. I've been climbing for the past year. SPY very, very close. IWM about to see a macro break. Exactly how it saw it January 2021 right here. Same move. Gap up there, macro break, all-time highs. Looking for the same thing again. And then NASDAQ already at all-time highs, pulling back. Going to see more upside. And Dow, same thing, already at all-time highs, pulling back, looking for more upside. This applies to, if you go back to 2021 and, more than likely, any ticker that you go to that's been around for a while saw upside in January of 2021. The market is cyclical, waves of ups and downs, bull cycle, bear cycle, bull cycle, bear cycle. We are entering into a new bull cycle in the entire market. So we're looking for upside. That's pretty much it for the video. Next week, if we do not break macro resistance on AMC early on in the week, it is going to be a fucking bloodbath. I'm just going to be honest. That is my opinion here. If we do not break our macro resistance next week, it is going to be fucking bloody. And like I said, macro resistance and macro support are intersecting this Thursday coming up and Thursday, Friday, and that level is roughly 370 to 390. I'm not saying that we're going down there. I'm just saying if we don't break our macro resistance, we're going down there. And we need to hold this. If we break below this level here, this ticker's done. I don't see that happening. I'm just being transparent. I do not see that happening as the entire market is entering into a bull cycle. Even Bed Bath Beyond squeezed in January of 2021 with everything else. So if everything else is about to squeeze, synced up market wide, AMC will be squeezing as well. So really no worries. All we have to do is survive the rest of the month, which I'm assuming we will. So with that being said, that is it for the video. Hope you guys have a good weekend, and I will catch you guys next week.